Hello, everyone. Welcome back to the RationalInvestor.com's daily brief. I'm just setting up the screen here with all the Zoom chat boxes and video ninjas and all that. I'm not quite sure what's going on. We asked our tech CTO. In fact, he's on the call today, so maybe we'll harass him through the Afterparty show about this, but I'm having the weirdest problem with this computer. There is a part of the dashboard I'd like to show you guys, but I just can't. I don't know what I'm doing wrong. So anyway, I'm in a little bit of a frazzled frame of mind here this morning anyway. So anyway, I'll try my best to give you some value here for the next half hour or so. Talk a little bit about what we're seeing in market and prices and stuff. And hopefully, like I said, hopefully give you some value. News today, and actually what I usually start with is what's my routine? If anything, we want to sort of get this as part of our regular routine, going through the routine. So today is Tuesday, 18th of April. News headlines. Seeing Econs relatively happy. I mean, I don't see anything dramatic. U.S. housing starts, permits fall. So the data in the States is a little bit softer. Interesting to see how things like Canadian inflation rate sinks to 19th month low. But I told you I went to the grocery store the other day and there was a 10% increase in the price of muffins and bread and stuff. So I'm not quite sure how that works. I did see a report. Somebody had pointed out that Canadian housing prices have actually fallen 20% from their peak, I guess about a year and a half ago. So I would imagine a big chunk of that inflation number is to do with the housing prices. And of course, you've heard me go on endlessly about the Canadian housing market and the stupidity of it and all that. So I suppose that's coming in line. German as a proxy of sort of Europe, kind of a mixed bag there. Investor sentiment slightly softer. It's interesting how stocks over in Europe are sitting relatively up at the top end of the range. I suppose you could also make the argument with the S&P and the NASDAQ and stuff there. I guess on a 52-week basis, we're up near the top end of the range, but I still think we're well off the historic highs. And I mean, I don't know whether you believe any of it or not. I don't think anybody in China has the balls to actually report to Winnie the Pooh that anything is negative. And if you do, you're basically taking your life into your own hands. I guess it's the same thing with Vladdy. So data coming out of China is beating estimates. Who knows if that's even remotely true or not. And then, of course, all this economic data is built on a house of cards, like empty, half-built cities and stuff that really don't make any sense. But welcome to the 21st century Fugazi economics, I suppose. Specifically looking at the data points themselves, if we actually see the data, there is that German sentiment indication. So it's quite a bit off of recent reported numbers. There's that Canadian inflation data. It's interesting how the headlines that they bark to the public, inflation sinks to 19th month low. But interestingly enough, if you actually look at the inflation number, it's actually came in, I guess, I don't know, consensus says 4.3, forecast 4.1, and it actually came in a little bit higher. But they won't talk about that in the media. They'll just talk about what a great job these central bankers are doing at bringing inflation down. I don't know, that's debatable. And you might even argue month over month, actually, the numbers are, that's quite a bit higher than really what the market was looking for. Down in the States, of course, we've talked lots about the housing markets. Hey, there's my UK buddy, Stoned Ape. I haven't seen you in a while. I was making reference to you when we were looking at the UK inflation rates. In fact, I think, I saw Remember we had done our study over there when I was crashing on your futon. And it showed that the UK inflation rate, according to our Feigenbaum analysis, should top out at about, I think it was like 11 or 12 or 13%. So anyway, UK inflation still fairly high. So I was looking at that, thinking about you this morning. So kind of cool to see you over there on the YouTube page. Mr. Stoned Ape, Mr. Ape, Mr. Stoned. I don't know. What do you like to go by? Anyway. I think probably the biggest thing that's going on in the investment landscape today, interesting enough, I think, is all about this testimony. Hearing entitled Oversight of the Securities and Exchange Commission. And of course, it's really just a conversation with Mr. Cueball here. And it is interesting to sit and listen to, one thing I love about TRI is they're very active listeners. So, the commentary in the lounge this morning was, how would you categorize ETH? And it's sort of like dodge the question, dodge the question, dodge the question. Of course, I think lately he's going after Trex. And it was kind of funny because on the weekend show, that broiler chicken show that I do on Sundays, I had sort of pointed out that, hey, Mr. Gensler has been awfully quiet recently. And then, kaboom! Monday morning, he drops the bombshell. So anyway, probably when I'm done this video, I'm just going to go back and listen to the rest of this conversation. But the Congress now down in the States is actually controlled by the right-wing political party, and they're slightly concerned, let's say, at the runaway government. It's incredible to watch the pendulum swing back and forth, because now it's sort of like, the socialist big government. In my country, of course, I've talked to you endlessly about how substitute drama teachers are literally trying to basically rewrite the entire sort of constitution of our country and give these central powers, central government, just unlimited power. It's remarkable to watch it happen, especially in a minority government. It's just stunning to see how quickly they're moving. Anyway, down in the States, there's a little bit of a check to the runaway socialism, in that the right-wing political party has now taken over one of the houses of the U.S. government. Probably it translates into more sort of, how do you say? Gridlock, I think, is the term they like to use, where really not a heck of a lot changes. Anyway, we'll see what happens. But you can definitely see it in Cueball here. He wants to come down hard on these cryptocurrency issuers, and I suppose also the exchanges that enable the cryptocurrency, and also too, they made reference to FTX and stuff like that, and how a lot of these, unfortunately, these kids involved in the crypto space were kind of using their exchanges as almost personal piggy banks. And of course, good old Tyler over there at Crypto Chico, he's extensively made reference to how CZ is slightly suspect in his behavior. So I wouldn't be surprised if this is a reoccurring theme now, especially as long as Biden's sort of at the wheel. And, I don't know whether we have Trump come storming back into power in 24, 25. It wouldn't surprise me if he does win, but until then, we got to get used to this guy, and this is basically the theme of the market. And I've talked about how I believe crypto is in an accumulation year, and I wouldn't be surprised once we get through this sort of seasonally friendly part of the market that we're probably going to have to go through some real poop with this guy. So just be forewarned. It was kind of funny on the weekend, like how I'd sort of said, well, I guess this guy's kind of disappeared. And then, uh-oh. Oh, so officially it's Mr. Stone. Okay, I should write that down. Thank you, sir. Anyway, so this is the story, the topic du jour. The irony of all of this is that I never hear any of these people ever badmouth Bitcoin. So in a weird sort of way, I think Bitcoin's kind of bulletproof through all this. It's going to go up and it's going to go down based on market sentiment, but I never hear anybody badmouth Bitcoin in particular. I suppose, I would do a deeper dive into the website right now, but there's some really weird error that's popping up, and it seems to only be happening to me. I'm not quite sure why, but anyway, crazy. Maybe it's my router. Chris and I were talking about maybe I should just, after the videos are done, reboot the router. But anyway, so I won't go into specific signals, which I would like to do, but we tried to do that yesterday and it just landed flat on its face. So I'll just talk sort of generalities here. You can see where we are on the breadth indicator for the stock market. We're definitely not cheap. They're not throwing the baby out with the bathwater. The absolute best signals that we can get, I suppose, are when the breadth is now is down below 20. It's crossing back bullish. Then we look down at our breadth readings, and you see that they're heavily, heavily oversold on both the short and medium term on things like the country funds and the S&P 500. And what's the end result? A nice big fat rally in the markets. So, we look at the number one, the breadth. We're not necessarily overbought. We did get a little bit overbought there a week or so ago. Prices have actually kind of gone sideways a bit. So it does make sense that overboughtness is getting cleaned out. Interesting how the teal, sort of the longer term trend, is now overbought. So that unfortunately means that we probably should be looking for some sort of pivot in the market. I think that just makes sense. How exactly that looks, it's tough to say. Just in the short term, if we look at the histograms, we can see on the medium term, the country funds are like the whole damn world equity market has been bid up. And on a medium term basis, we're probably they've just stretched the rubber band too far. Also, too, it is May, or May is coming. Where are we here? I think we're like the last week of April now, right? We got basically 2 weeks, and then we will be officially into May. In fact, actually, May 2nd or 3rd. That's the next time when we get to hear from good old Jerry and the Chair Pals. Jerry and the Chair Pals. Actually, I like the sound of that band. Be a good couple weeks. How does this look? Usually they like to bid the market up into the Fed, and then the Fed comes out and says, nope, we're still going to keep raising rates, and the whole damn market rolls over following that. So munches, this is going to be back and forth, back and forth, back and forth, head fake tops, head fake bottoms, but on this medium term basis. And then also too, looking at the breadth indicator itself, we're getting pretty overbought. Probably if we look at the broader market, we see probably similar message. So Dow Industrials, interesting on the medium term. The industrials actually is basically up near 100%. You can see the utilities, the bonds are already starting to break. Usually, this whole recent market malaise, really, you could argue over the past couple of years now, has been all about the bonds. We've had a bit of a reprieve in the interest rate environment. People have gotten kind of comfortable with the idea that maybe short interest rates have peaked. But as we've talked about at length recently, and that's all this kind of conversation, how does the yield curve market work, and how do they use it to slow the economy, and what happened there through that crazy Jupiter-Saturn cross apex that kind of screwed everything up with regard to, stimmy checks and ridiculous amounts of money that the socialists were dumping into the market. And what a surprise, it basically translated into a massive inflationary push. Point there is we use the euro dollar market to sort of tell us whether the market believes that the Fed has actually gotten in front of this inflation problem. And I don't think that the euro dollar market believes that they have yet. And it's probably going to take a few months, even more. Now, I would imagine probably even through the summer. We are into the usually the commodity prices actually peak specifically things like energy prices usually peak into the May period. In fact, it's the May 2-4 weekend specifically that this crude oil market should peak. Metal markets look like they're catching a bit of a bid here. You can see the bond markets, interest rate markets, not overly happy right now. And stock markets, like we said, kind of weaving back and forth, bob and weaving. And actually an interesting sort of aside, looking at the breadth indicator, you're kind of thinking, well, maybe we should be thinking about tops in the market. And we looked at the stock market recently, and actually I noticed when I was watching the video back later on that this left shoulder should be actually off of, whoops, oh, darn. Let's try that again. Right shoulder, beg your pardon. Should be really off of whatever our high is here because we haven't actually put that in yet. And it does look to me like we just went to a higher high here on the stock market. So I don't think we're officially topped yet. You can see internally, Willie is nice and stupid. Little bit of a bear div, not really. If anything, what I would prefer is, and actually you can see the div-ishness is happening. But I would prefer this MACD to actually look like, see, and notice how this is an articulated top. And also this is an articulated bottom. So I would like to see one more push up here and then roll over. And like over the next couple of weeks, probably into that Fed meeting, that's the event that I'm looking for. So I don't think that we have officially topped just yet. Guys like Julian who love his RSI. I suppose you could make an argument we have a downtrend working here, so all we're doing is just sort of rallying back into resistance. So notice boink, boink, boink. Do we get a boink up into here? Seems logical. Also, too, notice we don't really have a compression in the Bollinger Bands. In fact, we have Mr. Bollinger Band compression on RSI study on the call today. Today being Tuesday, we have our CTO, Sjord, on the call to give us a site update and sort of development update. And I suppose learned quite a bit of feedback from sort of the social media audience. They'd love to hear more from Sjord. So maybe if we're really lucky, we can get a short out of him today of some sort of earth-shattering comments with regard to the crypto market or something along those lines today. I don't know. We'll see how it goes. What do you think, Stuart? You up for your prime time spotlight here today?
It's wonderful. I always am very relaxed before the show, and then the tension gets higher. No pressure.
And I build them up, build them up, build them up, yeah. Build them up. No pressure, no pressure, no pressure. All right. Somebody says, is that yield curve document available for members? I don't see why not, Sean. Maybe just PM me it. It wasn't really, I think I put it out in a tweet, right? I had actually originally put this yield curve document out, and it's sort of like this is the meat and potatoes of that document. And I wanted to actually try and explain in detail what the heck was going on and why the banks are under pressure here. So that was, you notice that that's what this document is right here. It's in the Twitter feed. I mean, by all means, if you want it's not really that big of a deal. And also too, Josh said that he really liked this document and he would like to see if he could make a blog post for this site. And I've said to you guys repeatedly in the public, this blog is just, and actually it's kind of cool to see. Actually, let's see if this is updated. If I'm not mistaken, yeah. Stuart's now actually put the blog here on the left-hand panel, so you can access it really easily now here. This blog, this is such an incredible research tool. I don't think actually there's any other place on the internet that does research half as good as what we do here. It's just so good. So anyway, the point being that Josh was kind of like, I want to make a blog post on that. So don't sort of consider this a polished document. This is just Brian. There's that tweet that I was talking about. I'll throw it in the lounge just so you have it. You just pop in the lounge. You should be able to see the link. And really, the verbiage of all this was just simply to try and explain this image, and why the SVBs and stuff went under. It does make sense why they went under, and I've seen this happen in crypto now 2 or 3 cycles where we get up top and everybody's like, "Oh, right, we're all rich. It's the whole brand new era." New aura, nobody bothers to take any profits, and then the cycle rolls over because this is venture capital. Ironically enough, actually, I think I had it here. This is a document that I would like to work on through the whole year of 2023, and it's sort of like the whole shebang. Why do these cycles act the way that they do? And I was even perusing this, right? We all know this image. This sadly is the crypto market, and I've seen this happen now about, I guess 3 times. Saw it happen in like 2013, 14 with the Gox peak. Saw it happen in 17, 18 with Donald Trump and the CME listing. Saw it happen in 21, 22. I guess you could blame it on FTX blowing up, but I think FTX blew up because they just assumed that prices of things like Bitcoin and shitcoins and stuff were going to continually just stay up and not have to go through this cycle, which is so normal for venture cap. It's ridiculous. And I might even argue that the banks themselves, they also were subject to this. And that was the conversation about this silly little TD bank, that most heavily shorted bank stock in the world now, which I find quite amusing. Although I don't really have it on here. I have it more on my Twitter feed here. This conversation I had with you yesterday. I mean, ironically enough, you could make an argument that these bank stocks look exactly like this crypto cycle, right? And this is exactly what the NASDAQ looked like in 2000 at the top of that market. It's quite remarkable. It's like you almost want to say that this is cliche, how cliche this was. So anyway. All right, keep getting dragged down that rabbit hole. Let's leave that topic for now. So you can see we're up at the top end of the range of the market. Right, whether it be the S&P 500, whether it be all the sectors of the stock market, whether it be the bond market, even commodity prices. And remember, the whole sell in May and walk away conversation is about the commodities industry. So you can even see it in there. I suppose the interesting thing is we said that China come out and said that Econs relatively better. And I think if there was one part of the market that's relatively okay still, it's Asia. But I think it's just a question of time before this rolls over. Europe kind of came off of its euphoric peak there. And actually, I'd be curious when we do talk to Sjord to sort of get a barometer feel for how they're doing in Europe. Because like I said earlier, we had pointed out that, I don't know what the hell it is, but the Germans aren't feeling so good. So I don't know whether the Dutch are feeling the same. I guess that was over here. So the Germans are kind of, well, we're relieved that the Russians aren't going to be knocking on our doorstep anytime soon. But at the same time, too, are we all going to start up a new business in Germany right now? I kind of think not. And there you see the Euro area. I guess that's what EA stands for. I'm not quite sure. But you can see that also too, that number came in pretty soft. This probably will maybe temper the euro's sort of I don't know, enthusiasm to crank short-term interest rates up, which might also help the euro calm down a little bit versus the US dollar. If anything, I think Sjord would probably like to see a stronger US dollar and a weaker euro, but that's a different conversation. So yeah, Econs a little bit softer out of the States here today. Housing starts down. This is kind of what the Fed wants to see. Of course, we've talked lots about Mr. Fink, of course, sort of artificially propping up the housing market, securitizing homes, all that kind of stuff. Building permits itself actually off a chunk as well. But you can see the housing starts number still fairly robust. So it is a bit softer than previous, but much, much stronger than what people were expecting. And I think I pointed that out in headlines and stuff that we saw yesterday. So the housing starts and permits are falling, but it's not as much as what I think the Fed would like. And then bring that full circle with regard to interest rates. We have been talking recently, and I suppose we can just throw it up here, although it might take a second to find this. I think it's over here. We won't really know that this inflation problem is dealt with until we actually start seeing the market-based proxies start to M out and break down. So we do have the 10-year US Treasury bond. It has topped out, so that's interesting. But our market-based inflation deflation proxies, no top there yet. And of course, mortgage rates, they are soft. So I'm not going to say that they're falling. I'm not going to say that they're rising appreciably either. They're kind of just going sideways in here. But if that housing market actually had topped out and started breaking down, we should start seeing some real structural failures here. Obviously, a move through this level here, about 6% or so, and then we'll know that the housing market has calmed down. It's just not there yet. So big hurry up and just wait on all that. And I get the impression that the stock market also is kind of just waiting on that as well. Probably a couple of things that we could touch base on. We haven't talked about it in a bit. Things like gold silver ratio is a really good proxy to sort of see what the market thinks of the sort of economic prospects going forward. If this is moving up, then that means it's moving in gold's favor. And that means that people are sort of not interested in industrial use for the metals. Silver is used in a lot of sort of clothing manufacturing and also, various different industrial capacities. And the demand is really more about just buying gold and burying your head in the sand because inflation has run away. If this is falling, then it means that the economy is doing better. And of course, after the massive stimulus here in early 2000, right, this is the market freaking out through the sickness shock. And then this is the other side. Shouldn't we demand mortgage? No, just give them all the money that they want. And the economy, of course, went crazy. Kind of calmed down. The Fed sort of, okay, we got to get some religion. Maybe we're going to start raising interest rates again, try and cool things down. So this thing goes and puts in a head and shoulders and starts to work its way up. It kind of looks to me like the market's kind of like, I don't know which way we want to go. We do have this cute little pattern here that sort of stopped the industrial or the sort of panic. And we did notice that things like the Fed spread and stuff like that started to calm down right around this point, I guess, in the middle of 2022, which I guess corresponds with that. The economy is doing a little bit better. People aren't just running out and buying gold and burying their head in the sand. And now it kind of looks to me like we're just stuck in a range. And if anything, that's probably what you want. This kind of environment is like run for the hills. the sky's falling, all that kind of talk, right? This is sort of like, man, business as usual. And really, you might even argue, well, I think that's about all you can say there. It's just business as usual. Still a very high historical rate for how many ounces of silver does it take to buy 1 ounce of gold? Usually this normally, like historically, if things are relatively fine, in this kind of environment, the economy was doing better, right? 1990, end of the Cold War, big dot-com boom. You can see the trend in silver's favor. And then, of course, George Bush Jr. raping society. We mysteriously lost $1.2 trillion. Oh, yeah, sure you did. Hey, did you check your back pocket? Oh, there it is. What a surprise. And of course, the gold market goes crazy in that kind of environment. The only solution is, well, just turn the printing presses on and we'll hyperinflate our way out of the problem. And gold says, all right, I'm going to go crazy. So if anything, we would like to see us get back into this sort of downward trending market. And you can see, through this sort of, latter part of the 20th century, beginning part of the 21st century, that about 50 to 1 seems to be the sort of base. And when the economy is happiest, that's what it seems to me. I don't know. All right. I don't know whether I really gave you guys any great value here today. I suppose we can, because we talked Gensler, we should probably wind this up with a comment about crypto. Popping on over to, where should we show you this? Weekly chart, there's not really much changing here. Inside bar at worst. We already consolidated for 3 weeks and broke out through the top. So if anything, this is just sort of backfilling. And key support is actually against all these doji lows here. So it's just sort of a sideways market. In that sideways market environment, we did have the algo actually roll back over negative. And I was looking at it yesterday, kind of going, this thing can't sustain itself up top here. And sure enough, it broke. So last night on that crossover, and just keep in mind this trading plan, it's nothing more than just I'm going to sell, I'm going to buy, I'm going to sell. Let's see what the hell happens at the end of the year. I wouldn't really recommend anybody do this unless we actually run this for a good couple of years and we actually have data that clearly shows that this outperforming right now. I would still consider this very much beta testing. Having said that, you see Mr. Gensler, I mean, he's not really being very friendly to crypto. And if we look at the broader crypto market, there were some really interesting bright spots. This Komodo jumped up here this morning. This is the third time this has happened this season. So a little bit sloppy action on Brian's part. But anyway, did see the rally. Got the sell half on a double order working. We'll see how that goes. I mean, the good part about this, higher highs and higher lows on heavy volume. So I don't see any reason why we won't get filled on this down the road. But just got to cool your jets and not cool your jets, just have the orders working and just be patient. If I was on top of my game and everything was rocking and rolling, I would have probably been banging out double tweets. But geez, I've been a little sloppy this year. But good to see that things are basically progressing as we sort of anticipated. You can see where I came in on the buy side on this. I think I picked this thing up off of this double bottom. And actually, this is kind of funny. There was a gentleman who was on the site and really had a lot of fun interacting with him, but I don't see him on the site at all anymore. Hope he's doing fine. But you can even say, actually, I thought I had I guess there it is, sort of January 20th. That's when I bought this. So off of this double bottom breakout here. This was, if I'm not mistaken, one of Eddie's favorite names. So Eddie, if you are watching this over in Romania, you should be very happy camper. Everything that you learned at TRI to do is paying off. So way to go. And actually a bit of greens coming back on the screen. Oh, look at this little CTS here. Now that guy's perking up. Look at that. I mean, this is what I'm trying to teach you guys to do. I don't know whether you guys remember, but back at the end of the year, I was going, do you have your shit together and all that kind of talk. interesting too how this beautiful, basically Brian's favorite fib right there, tag, and then just see you later. So that's, I think, what we like to call a shark setup. So crypto's just doing its thing. But I did notice on that announcement yesterday about them dropping the hammer on Trex, that the whole crypto market sort of yawned there. And so or yawn, that's probably not the right word, moaned, if you will. That's probably a better word. And I actually think that there's another smaller megaphone. This is a 30-minute chart. I think there's a smaller megaphone. We slammed into 2.618s and they really messed with the market's heads all around this level. You can see they even took it to a new low. And then after taking the market to a new low, they jackknifed the market higher back up basically to the POC here. We'll actually have our stock pickers club meeting tonight. And this is actually a really interesting chart. It's not a stock, so I don't know how David's going to respond to it, but this is actually a pretty good example of that midpoint of the megaphone being tested, and this would be David's initial target off of that megaphone pattern is the midpoint check, and basically checking the POC. And you might argue that if the market does accept, you can kind of see the bull flag starting to form, A to B, C to D. That will take us probably up top here, which is kind of megaphony toppy level. And I seem to remember yesterday even sort of mentioning that, we got maybe 1, 2, 3. Oh, up we go. 1, 2, 3. And then, of course, this probably happens right into, and I don't know, maybe that's a bit long down the road, but maybe we just bob and weave for a bit and then make our move up top. But I've been thinking that, we got a long time to this FUMC coming up here on the 2nd. So how does the market behave into that event? I don't know whether we're going to be all the way up here, but you never know. Time will tell. The most recent bot that we had working, its target's still 32. So it's interesting how if we did steamroll our way up into here, that would be up into that level, and that would be the third tag of a megaphone top, which would set up a shorting level. So we'll keep an eye open for that down the road. As I had said there a moment ago, the algo is actually out now, so it took like a 3% loss on that last trade. Not huge numbers, but I will say, a little frustrating here with the algo of late, but that's what happens with algos. You live by the sword, you got to die by the sword. So, uppy market again after yesterday's meltdown. I get the impression that the Trex news wasn't really received very well by the market. And I did see, it was almost like we saw the response from Trex, which was sort of like, we're going to fight this tooth and nail, blah, blah, blah. There's where we will fight tyranny and all that kind of talk. And then really nothing else really followed up off of that. So not a big surprise that there wasn't anything sort of following that. Path of least resistance, because it was a megaphone. And because we banged up against the top of the megaphone, that actually was sort of the original topping pattern. And we see if I can show you that. It's a big one, right? There it is, all the way back there. Probably need to look at this like on an hourly chart or something to see that. There it is. So boom, 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 right? All we did was we came back, slammed into the top of the old megaphone and bounced right off of it. No idea how the hell this is going to play out. I will say that the last megaphone, when we had this second sort of tag of the bottom, it set up a really ugly bottom that I couldn't trade. There were site members that were able to take that trade, and it looks like history's just repeating itself. So go figure. And then, the good part about it, of course, is Sjord super bullish of things like this rend. is this an AI name, or is it just purely a proxy on video rendering? I think it's probably a little bit of both, but we should get a nice update from Stuart here shortly on what the status of the space is with regard to AI and all that. And for the record, Stuart's basically been saying that he thinks that this whole AI sort of theme is what's going to probably drive price action here going forward. And might even be the theme of this entire upcoming bull market. So, if you would like to hear more on this conversation, which I think quite a few of you people would, be sure to turn into the after party show here shortly, and we'll get a big old dose of this yard for you here. All right, I think I'm going to leave the summary at that. PMA for the win, slow and steady wins the race. Come on into the after party, and we'll start picking this stuff apart and talking about trade setups, etc. I didn't really talk about anything happening in the stock market trading wise. We do have our Stock Pickers Club meeting tonight, so hopefully in tomorrow's daily brief, we can talk a little bit about some of the stock names that are appealing to us too. All right. Okay, have yourselves a great day. PMA for the win. All the best, and bye for now.